If you're invested in Bitcoin and you don't think that Bitcoin will be worth millions of dollars per coin, you're thinking too short term and too small. When thinking about Bitcoin as it relates to other technological breakthroughs, you should be considering a Bitcoin price in the millions. 14.4 million by 2045 to be exact by my calculations. I'll walk through the model, the numbers, and how I came up with these Bitcoin price predictions. Let's get into it. What's up, everybody? This is Dante Cook with Bitcoin Simply, helping you to understand macro and markets in a simple way. We do 6 episodes a week, and if you haven't already subscribed, please do, so you don't miss out on fire content like this. Let's get into today's episode. Bitcoin is back to 58K, and the 58K blues are back. People are clamoring for some sign of hope, and I got you in today's episode. I'm going to show you how we get to $14 million Bitcoin by 2045. Let's walk through a few other short-term price predictions first. In his recent memo, Matt Hogan, CIO of Bitwise, gave an 80K before the end of the year Bitcoin price prediction. And he said, a few things have to happen in order for this to be true. Number 1, anything other than a clean sweep of both of the houses and the White House by the Democratic Party. Number 2, 2 rate cuts by the Fed and global liquidity continuing to rise. And number 3, no surprises. No Mt. Gox, no China ban, no FTX collapses, and we should be at 80K before the end of the year. Here's another price prediction from Jeff Ross on his recent podcast with Stefan Livera, where he talks about 450K Bitcoin by Q4 of 2025.
And I'm curious where you came up with the 475,000 target.
I had a couple days where I just spent tons of time looking at past charts and past cycles and things like that. And when I kept coming to around that price target, so 450 to kind of 500,000, I wouldn't be surprised if I'm too low. I could see it actually spiking up, to 700, 800, even $1 million. I could see it tagging $1 million. From past experience, I wish I could give this knowledge to new and younger investors. When you see the price of anything hockey sticking and going exponential,
right.
That's
You're
unsustainable.
Close to the end. Yeah.
It's the end. That's the final huge dose of leverage before it crashes. And so I would just beg people to be cautious at that point and don't go all in if Bitcoin hits $1 million or hits 500K, because you're probably going to have a really miserable 2 or 3 years after that if you do that.
In such a short time frame, Bitcoin's price is so hard to predict. There's so many variables and so many things that can happen. But over the long term, we can study history, we can look at patterns, and we can come up with models to make an informed decision about why Bitcoin is going much, much higher from here. Let's zoom out and take a look at why Bitcoin is the next Amazon, the next Microsoft, or the next Apple, and why you should be invested in thinking in those terms, 20 and 30-year horizons. The best trade of the last century was investing in these digital monopolies. Michael Saylor breaks down this thesis and this point in his latest presentation to institutional investors.
The best idea in the 21st century has been buy a big tech digital monopoly like a Meta or a Microsoft, somebody that everybody needs, nobody can stop. And if you bought it before people understood it, you're probably doing okay. And even after they understood it, you're probably okay. But diversification generally is selling the winner to buy the losers. If you diversified out of Amazon, you lost. If you diversified out of Apple, you lost. If you diversified out of Microsoft into any of the 100,000 other business software companies, you lost. And why is that? Because in the modern era, if you can establish a digital network, which goes to 1 billion people, it's got such a crushing economic advantage that it's unlikely that anybody else is going to be able to catch up with it. And Microsoft is proving that today, so many years after it was founded.
Think about this. $1,000 invested into Amazon when it IPO'd in 1997 is now worth over $2.9 million, or a 32% compounded annual growth rate for almost 27 years. Let's go to Microsoft. $1,000 invested into Microsoft when it IPO'd is now worth $6.9 million, or a compound annual growth rate of 25.5%. $1,000 invested into Apple in 1980 is now worth $2.5 million, or an 18.5% compound annual growth rate. Bitcoin has the largest network effects and is backed by the largest computer network in the world. Compute and data are now the things that the world values the most. So Wouldn't the monetary network that controls the majority of the world's computing power, or the largest computing network, have a higher valuation than $1 trillion? Listen to this breakdown that Anthony Pompliano gave.
What do you think happened to the argument in the last couple of years that a lot of traditional finance folks would say, well, with a stock, you can buy a real asset in the real economy and you're contributing to something in the real world. But Bitcoin doesn't really have those characteristics, but that has really faded out of the narrative. Why do you think that is?
I think people are realizing with the rise of AI that the single most valuable commodity in the world is computing power. And I've said for a long time that people think it's oil or they think it's something else. It's computing power. And so Bitcoin is the strongest computer network in the world. And so when people say Bitcoin's not backed by anything, it is backed by something. It's backed by the strongest computer network in the world. How valuable do you think that is in today's day and age? It's pretty damn valuable. It's worth more than $1 trillion for sure, right? And so I think that when people start to understand this currency is backed by a commodity, the commodity is the most valuable commodity in the world, they are starting to realize, wait a second, maybe I should get some. And so if you start to look at kind of that argument, you then say to yourself, well, how much bigger and stronger is the Bitcoin network? If you take all of the computing power of Amazon's AWS, Google Cloud, and Microsoft Azure and combine it, Bitcoin is multiples bigger than those three computing networks combined. And so it's hard to fathom just how big the computer network is, how strong it is, how decentralized it is, how resilient it is. And so not only is it a valuable commodity, it's also the greatest form. Think about if I said to you, a bunch of people around the world came together and they created something that's never been created in human history before. They created the strongest computer network ever invented by humans. And I said to you, what would somebody be willing to pay for that? And you told me $1 trillion, I'd laugh at you. And so I think that's what people are starting to realize is this is going to be worth a lot more. How much, when, it's all up for debate. But $1 trillion for a price tag of the strongest computer network in the world is probably too low. And I think that's where you're starting to see a lot of people say, okay, you know what? Maybe it is backed by something. Maybe there is something here that is kind of driving, the value, not just the price. And it took the explosion of AI, the return of data centers and computational power and all of that stuff to then convince people, wait a second, this is a computer network. This is data centers all around the world. This is something that I can just go and buy, kind of in the open market. And so maybe I should get some.
Let me give you a framework for how I'm thinking about Bitcoin's price and why I believe it'll be worth over $14 million a coin by 2045. I used Michael Saylor's new Bitcoin 24 model and spreadsheet in order to inform some of my predictions. And you know what? All models are inaccurate, but some are useful. They help our human brains to wrap our minds around exponential growth curves. It's really hard for us to do, and that's why we get sucked into short-term price movements and price predictions so often. Let's dive into the spreadsheet. As you can see here, this is the Bitcoin 24 model, a 21-year macro forecast with micro models for Bitcoin strategies. I love how they break down 5 different kinds of personas: the normie, the Bitcoin 10%er, the Bitcoin maxi, the Bitcoin double maxi, and the Bitcoin triple maxi. It's like they were thinking like McDonald's hamburgers type of naming, which is pretty cool. So one of the things that it looks at is it looks at 21-year outcomes. So it takes a longer horizon. And this is from Michael Saylor, Shirish, and Chaitan Jain from MicroStrategy. Thank you for putting these models out there. You can find the open source model yourself on GitHub. So when you dive into this, it looks at an overall model for Bitcoin here. What you see is you have a couple assumptions here. You can put in what you think the price will be by the end of 2024. And so I'm just going to go along with Matt Hogan's prediction from Bitwise and say that it's going to be around 80K, given those 3 factors that we talked about. From there, you can choose a bear case, a base case, or a bull case, and plug in some numbers that you believe that Bitcoin will have. So let's start with the 2025 annual rate of return, which the bull case is 75%, the base case is 50%, and the bear case is 25%. Now, when you think about Bitcoin having 3 years that are green and then 1 red year, we're in that second year of green price returns that we've talked about in the past. So if in next year is what we think it will be, Bitcoin will likely be positive given the past price predictions. So I think Bitcoin will probably be in the 50% range. I think that that's pretty accurate. I also think that, we're not going to be growing at these ridiculous rates forever. That sort of thing is unsustainable. and unattainable for even a network growing like Bitcoin. Eventually, the law of large numbers catches up, and you're unable to compound on a much larger base. So from here, let's talk about what rate of decay or ARR, return reduction, that we have a year. So there's 2.5%, 5%, and 0.5%. And then after that, Bitcoin's going to kind of level off and sort of do its thing. And with that, what you have is, I picked 3 states, 15%, 18% saying that Bitcoin is not going to be the next Apple, but something like it. And then 22% for my bull case. And when you dive into the numbers from there, this gives you the results in year 2045. So in the absolute bear case, Bitcoin's going to be $3.7 million by then, or about a 20% average return. My base case, we're looking at about 28%, or roughly that's actually a little less than Amazon has done over the past 27 years. So we're going to be right around that return percentage. And that means that Bitcoin is going to make up about 8.4% of the total assets in the world. One of the things that's a base case of my model is that Bitcoin is demonetizing real estate, gold, art, collectibles, bonds, currency, other former stores of value. When you dig into this macro model, you begin to see some of these things play out. And so you can plug in different things here to understand, what does Bitcoin look like on a larger scale if you don't want to look at Bitcoin just solely by itself. And you can add in different things here, like what's the rate of monetization that these things will slow by. So for gold, I believe that it's going to slow at about 3% a year. For art, again, I believe that it's not going to be monetized any more or any less. People are still going to like paintings, but it's going to be a little bit different. And then with all of these things, you can do fun things like, what's the entropy? Like, what's the decay of maintaining or managing these assets? What is the inflation cost, or how does inflation impact these assets? And then you can also talk about the amount of dilution in these asset classes. So real estate's about 2% a year. Again, that's if we believe that we don't come up with better ways to make houses, which I believe that we will. Equities, so you have the inflation rate or the amount of shares outstanding in these companies. And we all know that everyone's not buying back shares. Or art, or gold. All of these things you can plug into this model, and you can get this sort of view of what Bitcoin will look like in terms of the assets by market cap in the globe, which I think is pretty useful and pretty entertaining. If you think my numbers are crazy, let's go back again to Jeff Ross from his recent podcast with Stefan Livera, where he talks about, he believes that Bitcoin will grow and move at a steady state of about 20 to 25% a year at a steady state moving forward, which is even higher than what I put into my models.
Bitcoin has these annualized returns that to date have been just ludicrously high. They've been super high, but they're clearly slowing down. So the way I look at it, and we talked about this before, is I think for the next 15 years or so, they're still going to be extremely high, but they're not going to be like the 2010s decade. I think when I did the research on that, the annualized return rate was about 180% annualized. That's crazy. We're never going to see that again. We might see it briefly during the bull market, but not over the longer term. I think this decade we're looking at kind of like a 50%, 45 to 50% annualized return rate to the end of the decade, and then as we go into the 2030s to 2040, I'm looking at about 20 to 25%, somewhere in that range. It's disappointing that it's slowing down. Yes, you're not going to become a billionaire because you go all in today, but that's still way better than stocks and bonds and currencies and whatever else real estate, whatever else you want to invest in.
I encourage you to download the spreadsheet and play with the model yourself. Type in Bitcoin 24 GitHub into a Google search, and it'll pull up the right repo or repository for you to find this sort of information. You can add more information or your own assumptions by sharing it at GitHub itself. So I'm going to be making some changes and adjustments to the model to add some more useful things so we can look at retirement and other sorts of things, and the ability to withdraw Bitcoin, borrow against your Bitcoin. It's going to be pretty exciting, but download it yourself. Let me give you a final few thoughts. This is not useful if you think that Bitcoin's only use case is for criminals. But if that was your base case, I would say you don't need Bitcoin for that. You can just use a normal bank like TD Bank. And if you think your assets are safe in the traditional financial system, well, maybe you should rethink your assumption, because Fidelity, the $5.4 trillion asset manager, confirmed that 77,000 records were hacked, including license, social security numbers, and personal information. With Bitcoin, you don't have to trust a third-party custodian, even one as reputable as Fidelity. You can remove all counterparty risk and protect your keys yourself. If you need help mastering self-custody, in cybersecurity? Well, the best place to go is the bitcoinway.com. Schedule a free consultation with one of their cybersecurity specialists, and they'll help you master the skills and remove your Bitcoin from institutions like Fidelity, where they're subject to being hacked. Let me leave you with a final few thoughts from Bill Miller, who has one of the largest positions in Amazon, and he's one of the longest Amazon shareholders. And now he's considered a Bitcoin maxi with more Bitcoin in his portfolio than even his Amazon holdings. Here's what he has to say about Bitcoin and its future.
What's the intrinsic value of that Mickey Mantle baseball card that sold for $5.5 million? It's just cardboard, and it doesn't even have a legend. It could be counterfeited very easily. Or what's the intrinsic value of a Picasso painting, which is just canvas and paint, but people will pay millions or tens of millions of dollars for it. So it comes down at the very basic level for supply and demand. So Bitcoin is the only economic entity where the supply is unaffected by the demand. So even with gold, if gold, which is $1,800 today, if gold goes to $18,000, there will be a lot more gold mined because mines that are unprofitable will become profitable. And so gold, which accretes today, the production of gold is about equal to about 1.5% to 2% of the total value per year. That's the same accretion that Bitcoin has currently. But this year, 2022, I think will drop below 1.5% on that. So only 21 million Bitcoin can ever be created or close to it. It doesn't matter if Bitcoin is 100,000 or 20 million, there's only going to be that many of them. All you have to really believe is that the demand for Bitcoin will grow faster than 1.5%, over the next number of years, and the price inexorably will go up. I've only recently been allowing myself to be described as a Bitcoin bull. I used to tell people, they say, oh, you're a Bitcoin bull, you own a lot of Bitcoin. I'm like, I do own a lot of it, but I'm actually a Bitcoin observer, and I'm observing its trajectory as a new technology and comparing it to the trajectories of things like the printing press, or the steam engine, or the railroads, or the automobile, or electricity. And it's following that very, not predictable, because it's not predictable certainly in the early days, a well understood path for the adoption of new technologies.
He understands that other stores of value like gold, real estate, art, and collectibles are being demonetized versus Bitcoin in a new digital reality. He understands that the demand for this asset in Bitcoin is being outpaced by the supply, which is fixed at 21 million. He understands that Bitcoin is a technological revolution like the steam engine, like the printing press, or the internet itself, which, oh, by the way, Bitcoin is growing faster than the internet, and we know how that's changed the world. Don't overcomplicate this, and don't think too short term. Zoom out and think long term, not in the hundreds of thousands per Bitcoin, but in the millions of dollars per Bitcoin. And with that, we're signing off for the day. This is Dante Cook with Bitcoin Simply. Happy stacking.